All right. Hello, everyone. We're just seeing a few more people join in, but slowly we're going to start. My name is Loritz, and with me is my colleague Tori and 5 founders listed on Flippa Invest. So a quick note on Flippa Invest. Flippa Invest is the fundraising platform atop Flippa. So here we are introducing founders to our investor community and helping these founders raise capital. So growth capital, and you'll find all these 5 startups and the founders here presenting today, you'll find them with rounds listed on the platform. So if you, during or after the event, want to connect directly with any of these 5 founders, you can do so by going to flippa.com/invest and sign an NDA to enter their deal room and negotiate and invest ultimately. So yeah, today's session is going to be 5 presentations, so 5 pitches by each of these founders, or 1 each. They'll have 5 minutes each to pitch, and then there'll be 5 minutes afterwards for Q&A. So we're going to do the Q&A immediately after each pitch. So if you have any questions, feel free to write them in the chat, and we're going to go through the questions one by one after each pitch. So throughout the pitch, you can write as many questions as you want, and then we'll get to as many answers as we can from each founder during the 5-minute Q&A after each pitch. So without much further ado, I'm going to go ahead and remove everyone here from the stage except Dale Merritt, who will be presenting and pitching us GolfPay. So just gonna remove everyone else, and then the floor is yours. Dale, take it away.
Well, thank you, Loritz. I appreciate the opportunity to talk to the Flippa investors today. Welcome everybody to my presentation. I hope you enjoy it. I'm going to share the screen here. So GolfPay is a golf course management software company, and we deliver software to golf course operators to help them run their business more efficiently and to help them drive more revenue as well.
Hold on one second, Dale. You need to share your screen. Can you try again?
It might have been because it was disabled. Let me try that again. Let me know if you can see it.
Yeah, there we go. Thank you.
Thank you, Loritz. Go to the second screen here. So the golf industry itself is just really growing, probably at the fastest rate it has in decades. And a lot of that has to do with the fact that there's like a perfect storm of different dynamics happening in the golf industry that's causing a lot of growth. Everything post-COVID has just made the industry explode. Junior golf is up 40% just in the last 4 years. So that's good news for us because we're positioned to really ride that wave of modernization for years into the future. The biggest problem the industry faces currently is there used to be, not enough business, not enough golfers. And then when COVID hit, just everything turned around. But now the average golf course operator is dealing with a lot of different fragmented software tools to run their business. And they're spending anywhere from $50,000 to a couple $100,000 a year in fees and marketing fees, things like that, software. There's about $1 billion that's lost to third-party aggregators industry-wide, and that is affecting the industry just in the sense that they don't like giving out all that profit. Our solution is an all-in-one golf operating system. We replace 10 separate tools that they use that are different systems now. We're also designed to replace the aggregator out there in the marketplace. Right now, GolfNow is the aggregator. That means that they have a big marketplace that they distribute tee times on, but they take a very big cut in terms of the revenue. The solution is going to cut cost, increase efficiency, boost revenue, and we do that currently with our existing customers. And we have 2 patents that we own, and the patents cover a lot of AI that we built into the platform. The addressable market is $2 billion. The first phase of that, where we're going to be focused, is what we call the serviceable market. It's around $350 million. That's what we can actually deliver on immediately. And then we can generate 3 revenue streams in that first phase. So this is kind of a list of our main competitors. There's 5 listed here, and it's probably hard to see the screen there, but let me back up. You can kind of see the green, the far left column, GolfPay 360, and that list of green all the way down. And all of these slides are going to be available on Flippa listing, and you'll be able to see all of this. In fact, a lot more slides that are here. But we're doing some things in the AI realm that's really, I think, going to completely change the game. But here's the ways we make money now. We make money off of online fees. We make money off of revenue sharing and then merchant fees. So this reflects very specifically the beta course that we rolled out last year. And so we generated $34,394 from our first customer. So this is the traction we have so far this year. We have a little over $300,000 in revenue in the last 12 months and 10 customers. The very first year we focused just on the beta, which was 2024. This year will be our first full year operating it with 10 different golf course operations. And this is kind of the point of time where we've got the product to the point where now we're really ready to scale. So these are some high level projections. 26, we expect to have 75 customers. And then you can see, from there, 150 the following year. We've taken a very conservative approach. We want to make sure that the investors feel comfortable with our numbers, but we feel like we can actually do better than this. But our goals, at the very least, in order to get a good exit for everybody that comes in and invest in about 2 to 3 years, we can accomplish that with these kind of numbers. So I've got a lot of experience with different software companies. I've been the CEO of a number of companies over the years. I've had 6 different exits under my belt. I've owned a golf app company. In 2015, me and a business partner exited, did very well with that. I sold some software to Twitter back in 2007. So that was a nice exit. So I have a lot of experience building and scaling companies. I'm not going to go through everybody here, but we have a very strong team of technical people, operational people, and as well as people that have actually made investments and that are working in the business. So I'll not go through every single person here because we're limited on time.
All right, Dale.
Kyle has been with us the longest period of time. He is just excellent right-hand man for me. He's been through 4 different exits with me, and we're excited about this business as well.
Thank you, Dale. So that was your 5-minute pitch. Thank you so much for presenting. I know there's a bit of ground we didn't cover, but in the absence of any questions from the audience, and again, we do encourage everyone to write down their questions in the chat, and we'll take them one by one. But Dale, while everyone is writing down any questions, I had one from you. I was going to ask you about your ask. So here it is, right? Like what are you looking for? How much are you raising? And what are you going to use that investment for?
Yeah, so obviously great question. So we're asking for $450,000. That's our goal, to raise that $450,000. Use of funds. Most of that is for sales and support. So like 70% is with sales and marketing. But the product's already developed. The only thing we're working on right now mostly is the AI piece. And so we already have AI functionality and have had that since the beginning. But now we're adding more functionality on the AI side. So part of it is for that as well, but mostly sales and support.
All right. And I was going to ask you maybe to share a little bit about your first couple of customers. Who are they? Where are they based? Tell us a little bit more about your ICP.
Yeah, so our first customer is located out of Utah, and then as well as Michigan. Let's see what else. But they're public golf courses, all very happy with the product, all right in line with our revenue generation, what we expect from a revenue standpoint in terms of our projections. I don't know what else to answer about that.
No, appreciate it. We actually have a couple of questions from the audience. So the first one is the one Christopher Benjamin is asking that the slide shows 2030 600 courses, and he's curious about what is the total number of courses in the US, and is the US the main target, or can it be used in other countries as well, these courses?
Yeah, so right now we're focused, our serviceable market is around 10,000 golf courses, public golf courses. So that's what we can deliver on today. If we just have 2% of that market, we're probably a company that's worth 10 to 15x what an investor would come in at today. Just 2% of the space in the public space. That's what it looks like. Would it be a return?
Thank you. And then that we have another question about who are the customers? Like what's you already mentioned a bit of that, public golf courses, etc. And then finally, what is the exit strategy or return on investment plan for investors in your round?
Yeah, so the exit strategy, I like to turn around and exit within 3 to 4 years max. We're already at 2 years. So I'm expecting probably 2 to 3 years we can exit, at least have a great opportunity to exit at a good number. So probably 2 to 3 years.
Sounds good. And the exit, so can investors expect dividends, or is it a pure equity growth play for people who get involved?
The way our operational agreement works now is we're set just for regular distributions like any kind of partnership. So there would be, if there's profit and we decide we don't want to use it for growth and we want to put some on the, put some in our pocket, we can certainly do that. And anybody that's converted to into equity, into common units by that time would share in that as well. So it's
Perfect.
built into our operational agreement that we do dividends like that.
Last final question here. What is the use case for AI in your product deal?
So right now we use it for customer experience. So for golfers, when they book tee times, we have a omni-channel golf communication system that we patented, and there's AI that's lined that entire gateway. And what that does for us is it allows us to provide a better experience for the golfer when they're booking tee times. They can get real-time answers on the golf course, status of like frost delays, things like that. All of that's built into our AI. All the golf course has to do is just update the information in it. But the golf course can also ask questions about their business and get a higher level of business intelligence on their, all their data, like customer behavior, so they know who to target, when to target, and what to target them with in terms of what they want to try to sell them. But just lots of insights. You can ask our AI any question about our customers if they gave you access to it at least, and you could find out anything you wanted to know.
All right, Dale. Thank you so much for your pitch and for answering a few questions here. We're going to call to the stage the next startup founder, and that is David from Salon HQ. David, I'm going to invite you here. Come on stage. David, are you able to join the stage? If not, we will call the next in line. All right. Franco, any chance you are able to jump the queue here and hop to the stage? Thank you for joining, Franco.
Be working, but
okay, so video is not working for you, but hopefully you can share your screen and start presenting. I'm gonna count down the clock. You get 5 minutes to present SaaS MQL, and the floor is yours. Go ahead.
let's try 1 second. Okay, let me see if I can share a list. Are you able to see the slides?
Yep, go ahead.
Awesome. So thank you, everyone. Thank you, Loritz, for the opportunity. So I want to present you my company, SaaS MQL. Our mission is to help SaaS companies scale pipeline engagement and recurring revenue. Very quickly about me, I've been in B2B demand generation for more than 15 years. I was in different roles in Silicon Valley, San Francisco, first at Couchbase, Duetto, Optimize, and lastly at Branch. That was my last full-time role. And then I started SaaS MQL with that specific mission and with all the learnings from working at these fast-growing VC-backed companies. And the problem that I saw when I was working there and kind of talking to many SaaS companies is that everyone is sitting on a lot of data and signals about buyer intent and who is ready to buy and what company they should target, what contacts, but very few are capable of activating those signals and actually turning them into pipeline and opportunities. And so what we do is we basically close that gap by creating a multi-channel campaign system that we have developed, and that system is capable of turning those intent signals into actual revenue. So we see across the board, the problems are every company is trying to generate opportunities from these channels that are very overcrowded, especially today with AI. I'm talking about digital ads, I'm talking about cold emails, I'm talking about cold outreach, even live events, but very few are now effective at actually driving growth. And so our solution is basically this engine and this campaign system that we create for every client that we work with. We are a tech-enabled account-based marketing agency, and our playbook is developed to drive actual results. And we have many case studies of the effectiveness of our system, where we drove millions of dollars in recurring revenue for our SaaS clients for the past 6 years since we have been starting this approach. And our system is basically combines different channels together into one playbook. And our secret sauce is really ingesting the data from our clients, organizing the data and all the intent signals, and really expanding that, and then creating a campaign flow that uses both digital and physical offline channels like direct mail to basically target decision maker in enterprise companies. This is one example of our internal campaigns. We have many examples with our clients. These are the two models, the two programs that we sell today. One is called ABM Impact, one ABM Scale. We either go by campaign or by a retainer. We have been working with more than, I'm going to skip some of them. We've been working with more than 80 clients in the past 5 years. Some very important names like Rapid7, Quid.com, Freshworks, IntelliMice, Travel Bank, I can name many. And we're bootstrapped, we're profitable, but we're looking to now take the next step, our growth. And so we are ready to capture more of this market. We started going up market. Initially, we were working with a lot of Series A, B, and C startups, VC-backed startups. Now we started working with publicly traded companies with 5,000, 6,000, 7,000 employees. And so we partner for the long term with those companies to drive growth for them through our proprietary model. We also have two proprietary platforms that are part of our system, one called FunnelTap, one called Ideal Crowd. One is for tracking and forecasting campaigns, and the second one is for the segmentation of their account-based marketing data. And so we combine both the platform and the service into a single solution. And so what we're looking to do now is to raise our first round of equity, which is okay. In exchange, we're giving preferred share into our company, and the goal is to reach 6 million in annual revenue by 2028, which is basically 4x where we are today. And like I said, we're profitable, but we want to grow much faster than we have been. To answer some of the previous question, how the investor will see a return, definitely dividends will be an option that we can look even already next year or the following one. But obviously, we're also looking potentially at a strategic exit. We have been approached in the past by some of our partners and even competitors in a way, because we provide something that they don't. And so that is a potential that we see for the future. And the way we will use the funds is to scale up more on the demand generation, hire our first 3 sales reps, because so far I've been handling 100% of the sales, closing more than 80 clients so far, and then expand the 2 proprietary platforms that we have developed as a beta today.
Thank you, Franco. You went a bit over time, but that's okay because I don't see a lot of questions. So again, a reminder to the audience of investors, if you have any questions for Franco about SaaS MQL, you can write a questions in the chat. But in the absence of that, I have a few questions. Maybe Franco, you can answer. Maybe you mentioned a few of your partners, but what is the competitive landscape like?
Yeah, so we actually have one of the slides that is kept. We have so there are 2 types of competitors that we see. There are a lot of demand generation agencies today, but they kind of look to do similar things where they focus on channels like LinkedIn outreach or cold emails or digital ads, which they require a lot of upfront spending or they are very low conversion. Our system is very unique. It's something that nobody else does, of combining both offline channel and digital into one single outreach model that is powered by intent signals, and that's what makes it very effective. The second type of competitors are direct mail platforms that try to do what I described, but that's who we've been approached in the past to collaborate and partner and had some initial discussion about potential acquisition, because what we do is really make those direct mail platforms really drive results, which today they are very dependent on who is using them. Our model is unique in the way that we actually drive pipeline revenue results. Instead, what they do is just a logistical software to ship direct mail, basically.
Got it. And one other question. So what are your geographies like? Where are your customers based? Is it US focused or is it worldwide?
Yeah. So we are based in the US. We've been mostly based in Silicon Valley until a couple of years ago that we are now headquartered in Miami. All our clients are in the US, except for if other clients, we start expanding internationally as well. But right now our focus is on the US market. So we work with international companies, even from India, Australia, and Europe, as long as they target US and Canada as their target market.
All right. Thank you so much, Franco. I think we're ought to move on to the next one. But if you have any other questions for Franco, Tori is going to share the listing for SaaS MQL on Flippa Invest, which you can go ahead and connect with Franco through. So just head on over to his listing and look about investing in his round, which is still open. So Franco, thank you so much. I'm going to take you off the stage and invite the next founder to pitch his startup. So next up is Josh. So Josh, if you are with us, feel free to join the stage. Awesome. Hello, Josh. Okay, if you can share your screen, I'm going to count down for you to start presenting. You've got 5 minutes, and then I'm going to interrupt to ensure we stick to the dedicated time. Perfect. Thank you so much. Take it away.
All right. I'm Josh Lamb, co-founder and CEO of High Rewards. We're the first marketplace purpose-built for the 21 and older economy. Powered by proprietary AI and real-time retail data, we turn every receipt or visit and transaction into actionable insights to provide measurable ROI for brands and retailers. We're raising $500,000 on a $5 million post-money valuation. We project a 5x return within 2 years and X within 5. The raise is built to accelerate our proven model, which I'll get into, continue scaling our user base, deepening our data moat, and cementing our position as the category leader within the space. Our leadership team combines deep tech and retail and growth expertise. I previously led growth and marketing for companies called Leafwell, Shopkick, and Clover. So that's covering the cannabis space, traditional retail space, and fintech. Our Chief Commercial Officer, Rob Holliber, was a senior leader and president of Sony Mobile app, as well as Electronic Arts. And our lead investor, and advisor is Carlos Hernandez. He was the former CEO of JP Morgan Investment Bank. And now we're building this out for the 21 and older community. Our vision is bold. We plan to own the 21 and older commerce space, combining marketplace reach with deep consumer intelligence and advanced targeting. Our mission is to become the #1 marketplace in the 21 and older economy, powered by proprietary AI. Everyone says AI, but I'll explain more. And the richest, most actionable retail data in the industry. The total addressable market is huge, over 400 billion across just in the US, across cannabis, hemp-derived products, alcohol, alternative drinks alone. Yet this space lacks modern data infrastructure. Traditional marketing channels and data sources are either banned or severely limited, leaving retailers without SKU level insights and behavior-based targeting. This leaves consumers without really good discovery or personalization tools and incentives, which they all crave. So we fill the gap. Since launching nationally in 2024, October, so literally a year ago, we've proven our engagement and monetization model. Now we're evolving from just a gamified rewards marketplace to an AI-driven retail intelligence and ad targeting platform, shifting from the initial honeypot method of incentives and rewards to unlocking the deeper value of the data we've been collecting into new scalable growth. Since our launch, we validated the first part of the model with user engagement and partner participation. We've already surpassed over 77,000 users. We've tracked over 172,000 in-store visits and over 185,000 receipts, and have more than 125,000 in contracted monthly recurring revenue. Most importantly, we're collecting real-time geolocational behavioral data that no competitors have access to. Importantly, we don't rent our data, we own it. That feeds our flywheel. So every receipt, every visit compounds our advantage. Our proprietary AI personalizes engagement on a one-to-one level. Our platform surfaces pricing, velocity, and competitive insights down to the SKU level. This foundation for our flywheel only gets stronger with scale. Here's how the flywheel works. We add a user, consumer then drives our acquisition for campaign revenue, as well as data insights, which delivers better retailer ROI. That ROI leads to increased retail spend, which fuels more rewards and offers, luring more users, and ultimately even higher consumer engagement. It's a self-reinforcing cycle that compounds value on all sides of the marketplace. Our monetization model is diversified and scalable. Right now, we're driving revenue on a cost per conversion basis with gamified ad units. With the productization of our data, we'll be introducing a new SaaS model for data and analytics tools for SKU level location and competitive insights. This foundation sets us up to scale even quicker and increase profitability, which we already are. In the next 6 months, we are about to launch some campaign automation, roll out some premium partner dashboards, and integrate AI-driven analytics. Our goal is to exceed 100,000 in reoccurring revenue. Right now, we're at between 30 and 1,000, and expand our affiliate partnerships as well as groundwork for the next phase of our rapid growth. We're going to deploy 60% of the $500,000 raise toward additional user growth, acquisition, referrals, and retention strategies. 30% will continue to fund the AI and product development, and 10% to support a couple additional key hires.
Thank you, Josh. I'm afraid you're out of time, but that was your last slide anyway. So great. Yeah. Fantastic. Okay, I see already a question here in the chat. So Eric Stewart is asking, can you give a more tangible example of some actionable insights that your platform can generate?
Yeah, so right now, there is very little insight into, especially in the wholesale market within the space, as to what product is selling where at what price. So as soon as a producer sells a wholesale product to a retailer, they have no idea what their product is actually selling for, which products are moving the fastest. We're able to give them actionable insights to help them understand exactly what it's selling for, at what velocity, at which locations, so they can better productize and merchandise their product and create a more efficient way to produce it.
Okay, thank you. I also see, I see Jonathan here is asking, how do you plan to compete with fetch rewards and established players in the field, assuming you'll have to branch out from cannabis and alcohol only to general categories?
So fantastic questions. Shopkick was the original. I was the CMO of that company. Fetch came in later. But the idea for us to expand is to own kind of the regulated 21 and older market. None of those players really play in any of these spaces. You'll get a little beer and so forth with a Fetch and so forth, but they're really focused more on the same pie with Shopkick and Ibotta and a bunch of others, which is retail grocery. So your traditional retail, so your Target, your Walmart, and so forth. Now, we'll be able to play in that space as well, but we're going to start dominating the liquor store space. We're already in all the largest retail liquor stores in the country with partners like Cheech and Chong with their new THC drinks and things like that. So from that standpoint, the logical question would be, well, eventually they'll want to get into that space because they need to grow. And right now they're bleeding the same stone. So we expect most likely an acquisition, a potential exit to one of these companies that need to expand their reach. And none of them have the technology in place right now or the ability to manage the regulatory environment. And they just don't want to deal with it. They're trying to drive revenue and profitability for their existing model, which is highly commoditized. Lastly, what's really going to set us apart and create the moat is the data we have. Literally, no one has the data we have at the scale we have it in the world. And as cannabis and other products and other regulated products continue with decreasing regulatory scrutiny, which is happening, we're going to be sitting on the top with all the data.
Absent any other questions, I have one for you, Josh. So you mentioned that you're essentially a marketplace with a flywheel. And how do you onboard customers, and what does the product look like for the customer? You have the end user, then you have your actual customer. What does the actual product look like on the customer side for like these actionable insights?
Well, so you asked me a couple questions there, so I'll go with the first one. So as far as for the partner, what we do, especially within this space, is provide a risk-free way of getting going. Right now, they have very limited marketing channel access through traditional means like Google and other means. So we're providing kind of a safe space, an island where they can have more freedom, and we give a price per conversion that we agree upon up front. We're setting up tools very similar to like a Google and so forth, or Meta, where you can set up real-time bidding strategies. That's part of the AI build out. So they can basically set a budget, say what they're willing to pay out, and then we set the points values based on supply and demand. So essentially, a retailer wants new customers. We provide points to a consumer to lure them in to try their retail visit. When they do that and upload a receipt or validated purchase, they award points. Same things on the product side. On the data side, right now, it's a very closed ecosystem, so they know exactly what's happening within their own store for the most part, but they have no idea what's happening outside of it. So from that standpoint, we're able to give a unique view on a SKU level as far as what products are selling where. So there's no one that does that in our space right now.
Got it. All right. Thank you so much, Josh. That was your 10 minutes. We're going to invite the next speaker to the stage. But before we do, I just want to say, if you want to connect more with Josh, you can find his round live on Flippa Invest. And Tori, my colleague, will share it in the chat in case you don't have the link handy from the event email invite. So thank you so much, Josh.
Thank you.
Up next is Tom from Measured Risk. Tom, are you in the audience and can you hop up on stage? Thank you so much, Tom. All right. If you start, yes, I can hear you. If you share your screen, I'm going to count down and you can start pitching. You got 5 minutes and then 5 minutes Q&A afterwards. So I'm going to interrupt you when it's time for questions.
Understood. Okay. You able to see this?
Yep. Take it away.
Hey, everybody. My name is Tom Albert. It's nice to meet you. A little background. I've been in the industry for 25 years in cyber and even machine learning back in like 2005. So I've been at this game for a long time. Been involved in many exits through my career, Semantic a couple times, and drove a $500 million exit to Cisco in 2015. And so basically my background is aligned to fusion of intelligence. And for a long time, I could see that there's a problem in this space where there's an opportunity to fuse different data streams and different types of intelligence to give people an understanding as to what risks are likely to manifest. And by virtue of that, we built Measured Risk. And that's we built it with NATO secret PhDs in AI to fuse intelligence streams together to give you that foresight. It's a huge market opportunity. We're raising a 250K seed extension. So we've raised 2.3 million into the company to date. And at this point, we've discounted, for those that come into this round, we've discounted up until the end of October, actually, the round even further for you guys to jump in. So the problem's huge. Everybody's familiar with like what happens with the Suez Canal blockage, the CrowdStrike outage. I mean, everybody saw what happened with AWS the other day. The real issue is most organizations have no clue how that'll impact their supply chain. And so there's no real-time intelligence out there that tells people that. And that's really what we focused on at Measured Risk, is the ability to give you very quick insight into the resilience of your supply chain under duress and when, you know, real world scenarios, existential threats and crises happen. And so the solutions that are out there in the market are really what I consider historic in nature. Spreadsheet driven, non-native AI applications, not nimble. The crazy part is that to buy into these capabilities, you've got to spend like 50 to 100 grand to even come to the table, which basically block the entire mid-market for using solutions in this space. And so Measured Risk did something totally different. We built a native AI app that enables you, even as a mid-market company, to utilize our capability. And we're getting ready to launch our B2B SaaS self-service app, which opens up the entire B2B space. We're going to blow the entire market on its heels. We're super excited about this, and it's coming at the beginning of November. So what are some of the things that we've done? Well, number one, we've got a capability that enables you to basically look at anything that's happened in the world in the last 24 hours and very quickly model your supply chain against that risk, which is unheard of, the level of dynamic modeling that we can do and visualizations associated with it. We also have Measured IQ Assistant, which is basically a chatbot, but you can query your data. You can actually ask everything you want to know about your supply chain. You can even dynamically source alternates. And then you can look at things in your supply chain that might indicate that there's risk in that supply chain you wouldn't naturally know. So what's the characteristics of a supply chain risk that might manifest all the way down to individual suppliers and create cascading failures? We've got a really interesting competitive strategic moat in terms of how we built the technology and how dynamic it is and how scalable it is, and our barrier to entry in the market. We're actually offering the capability. We're going to be releasing this shortly. We're giving away a free version, so very much the Calendly model. And then we're actually the elite model is $149 a month versus the $20,000 expense that the typical solutions in the market provide. And then there's an enterprise tier after that. So we're changing not just the space, but we're actually changing the consumption model of the space as well. So in terms of traction and revenue, we're revenue positive. We've built the technology in the past to accommodate large enterprise, and now we're moving down market. Ultimately, is what we're doing, and we're using AI to enhance the capabilities in the platform even further. There's several clear paths to $1 million of ARR, as I described. It outlines them a little bit here, but basically in a space where people are used to spending $300,000, $400,000 per, with a vendor, we think that we can collapse that price point down and really aggregate volume quickly. So the total addressable market in this space is actually a $47 billion market. What we think the service addressable market for us is $12 billion, and the obtainable market for us is $500 million. We see that as tangible reality built. And there's a lot of things driving this space. So the SEC requirements, EU regulations, global, I mean, every single day there's something new that happens that make people very concerned about this problem. And it's a boardroom problem. Pre-COVID, it wasn't, people weren't talking about it, but now everybody is talking about it, which is great for measured risk. So those are the forces that are driving the real push behind measured risk. We're going to use that use of funds and use of proceeds to drive out all of our go-to-market. So we're really putting a lot of horsepower behind getting this capability into the hands of people. We're very familiar with product-led growth. That's the path we're going from this point forward. We feel that that's the right place for solutions such as ours. And the deal that we're offering is insane compared to historic terms. We've actually taken in the money in the past at 20 million pre-caps, and we're actually offering this at a $7.5 million effective valuation for a small tranche. So 250K, 5K minimum. And what we think we're building is really the next Palantir of supply chain risk, but with the ability to actually onboard as a mid-market client today without the friction of an enterprise sales play, and to be able to obtain value from truly an enterprise platform today.
Thank you, Tom.
Thank you very much.
Yeah. Okay, great. I'm just viewing to see if there's any questions for you. None at the moment, but guys, everyone who's in the audience, feel free to ask questions in the chat and we'll go through them. But in the meantime, Tom, maybe talk to me a little bit about your move down market. So I know you were also involved with some government contracts and some bigger enterprise sales. Now going down market, what kind of lessons are you bringing with you from the experience up market?
Well, we've realized that there's a huge void in the mid-market. And in other words, the mid-market wants a solution like this, but they can't afford it historically. And none of the solutions that are in place that are multi-billion-dollar companies have offered any kind of remedy there whatsoever. So for us, as a small, lean, what I consider highly nimble, agile AI company, we can do that. We don't have the burden of carry of thousands of people on the team to pay. So for us, we're really looking at this as like opening up, disrupting, and shaking that entire market, which is totally beyond. That's in addition to the technological innovation that we've built into the platform. So I can tell you, accessibility and democratization of this type of intelligence is hugely important. It's just as important for a mid-market company to know what the risk is that a Fortune 1000, and you shouldn't be priced out of the market. It's not
cool. Thank you. And Christopher is asking, can you speak to the exit and what form that might look like for investors?
Yeah, certainly. I would tell you, it's not a day that goes by that we don't get hit up by a private equity firm or an M&A shop. But the plan is certainly an exit within the next 2 to 3 years. Given our backgrounds in exits, we think that that's probably the right time window as well, with the way that the world is going. And the leverage of artificial intelligence that it affords you in this type of area, fusion of intelligence. So 2 to 3 year time frame. 2 to 3 years.
Okay. And maybe talk a little bit about like what could an acquisition look like? And like, is it a competitive bid, or is it more of a PE play? You mentioned you get hit up by private equity firms.
Yeah, I mean, I can tell you also, like, our competitors know me, right? So that they have, it's not like they don't know me and no measured risk. Certainly, I mean, if we cause much of a ruckus, as we believe we can, then that's an obvious situation. But I think that private equity certainly is a play. I would say that even some of the large consulting firms, I mean, this is the type of intelligence that makes them more relevant and more billable. I was just at one of the big 4 consulting firms this last week and having a meeting with one of their partners, and they're like, this is kind of the next level. We have whole supply chain risk management teams, but we don't have a capability like you have. So we think even the big 4 consulting firm types, strategics, which I consider the big players in the space, and then even private equity, obviously roll-ups.
Okay. Another question for you, Tom. Bilal asks, he might have missed this. What's the current monthly recurring revenue, and are you profitable today?
Yeah, so we basically in the past, what we did is we did $250,000 in revenue last year, and we're thinking that by the end of this year, we're hoping to try to catch some of the market opportunity with the federal contract. We're awarded a subcontract through a $920 million vehicle with the Department of Defense and GSA. And we were named as a subcontractor on one of those prime contracts bids. We're believing that we're going to be able to capture a fair amount of that money. And I don't think it'd be right for me to kind of speculate as to exactly what that number is going to land at. But let's just say that we're on a team of one of 10 teams around the $900 million 10-year blanket purchase agreement for supply chain risk management solutions.
Got it. Thank you, Tom. All right. And if you want to ask more questions for Tom about measured risk and the round that they're raising, go to Flippa Invest or click the link in the chat that Tori is going to forward. Thank you so much, Tom. We're going to move on rapidly to the next presenter, the final fifth presenter, David from Salon HQ. David, welcome to the stage.
Thank you.
Go ahead and share your screen, and then I'm going to count you down, and you can go ahead and present for 5 minutes, and then we're going to do 4 or 5 minutes Q&A at the end. Thank you very much. Take it away, David.
Thanks for having me. Name's David Grohl. I've got a co-founder of a company called Salon HQ, and it's an e-commerce platform that we've purpose-built for the beauty category. Primarily, it's focused on North America right now. So we provide instant e-commerce for beauty professionals, both to purchase products wholesale from a variety of different suppliers, and then sell those products very easily to their customers on the retail side. So we've integrated with 5 of the largest distributors in the United States on the back end, on the supply side. And then our licensing model is we effectively provide the platform to large players in the sector that are large aggregators of beauty professionals. So if you look at e-commerce in general for beauty, it's a very fragmented space. A lot of beauty professionals don't sell much product because it's daunting for them to do that out of their place of business. So again, we provide them with a very simple interface that lets them sign up for a storefront, and they can easily share it with their customers. It's customizable, and they can purchase all their products for themselves, and then they can also sell it directly to their customers. The reason this area has been so fragmented is distributors typically have been very brick and mortar. The 2 of the largest distributors in the United States are L'Oreal and a company called Sally Beauty. They have thousands of stores around the United States and are really just getting into the e-commerce game. We actually built the platform with Sally Beauty about 3 years ago and went to market with them. They've got about 1.5 million wholesale customers across the United States. As I said, so we embed the platform, the Salon HQ platform, in apps that the beauty professionals already use every day. So if you think about booking applications and other applications that run salons and beauty professionals' day-to-day operations, we embed our stuff in there. It's a white label solution, and then we enable those guys to, again, purchase and sell. There's a huge drive on e-commerce. Just beauty is moving online. If you look at some of the largest players in the space, everything is driving towards online e-commerce, and people are getting away from going to their brick and mortar locations. As indicated, we partner with large aggregators, so they kind of fit in a few different categories. We partner with distributors like a Sally Beauty that want to provide commerce solutions out to their customer bases. We also embed in platforms. Gloss Genius is one of the largest players in the kind of POS and appointment setting space. Cha-Ching is a very large marketplace provider that provides cashback rewards to large social networks. And then Phoenix here is a major player in the salon suite arena. Salon suites are basically like WeWorks for independent beauty professionals, and we provide each of their renters with their own e-commerce suites. We got a very simple revenue model. It's transaction based. So we take basically a slotting fee for every dollar that goes through the platform. Wholesale margins are thinner, as you might imagine. So we take around 5 to 10% of each one. And then retail purchases really range on the product category. It can go from 40 to 90%, depending upon whether it's a shampoo or a perfume. So we're doing a bit over 500 grand this year. We just launched Gloss Genius and 2 other companies that are going to be rolling out nationally within the next 2 months. So our forecast revenue just on those 2 accounts alone are 4.2 million in 26, and we're looking at a break even at the end of Q4 for 26. We're doing a safe note here, a 20% discount, $15 million valuation cap, and we're raising $500K. Team, we've all worked together. Myself and Mark, my co-founder, have flipped 2 companies before. We've been working together for 25 years. Graham Edwards has been with the company about 5 years, and I've known him for about 30 years, and he's had multiple flips as well. This is, stuff we can talk about, but we have 34 of the 35 largest brands in the United States on the platform currently.
Thank you so much, David. You are bang on the money. So thank you for presenting. The 5 minutes are up, but now we move to questions. I don't see any questions in the chat, but if anyone in the audience has any questions for David, please write them in the chat and we'll go through them one by one. But in the meantime, David, maybe I'll be really curious to hear you chat a little bit more about the customers that you have, like not necessarily the leading brands that use it, but some of the beauty salons that use your platform.
Yes, I mean, Sally Beauty, for those who live in the United States, they control about 60% of the beauty distribution in the United States. Retail, Sally is their retail arm, and they've got a brand called Cosmoprof. So the Cosmoprof brand is their wholesale side of their business, which again, they've got about 1.5 million customers that range, from an independent person just, working out of a salon suite all the way up to like a Great Clips and a Sports Clips franchise. So our platform enables any of those stylists. They get basically a QR code with a personalized website that comes preloaded with 50 different brands and about 10,000 SKUs that they can curate. And the value proposition for them is that they don't have to pay for building out an e-commerce platform for themselves. It comes preloaded, so they don't have to purchase any products for themselves. They can literally just pick the products they want to sell and then share the e-commerce site with whoever, their customers, through a QR code. We've got some pretty interesting technology on the shopping cart side that lets them do, kind of one-to-one recommendations. We've got an AI agent that's been built in that does recommendations based upon trending products being purchased across all of our different marketplaces as well.
And Roger here asks, what is the breakdown of revenue concentration? So software fees versus percentages on product sales.
Yeah, right now it's 100% transactional based. We had in here just, some of the other stuff that we're coming out with. It's really based upon the inflection point will probably be like mid 26 when we can start offering brand placement and data fees. A big area of interest for brands, and in particular, is when brands sell product to a distributor to get distributed out to their customer bases. That last mile is a big blind spot for brands, so they're very interested, and we have that last mile data. Because we're pushing the products both on a wholesale basis to the professional client, but also directly out to the consumer. So we think that there's a huge need here in the data side. On the SaaS side, we're adding other tools to the platform that we'll be charging what I would call like micro SaaS. So think about calendaring and other marketing tools that the beauty pros are requesting, things like SMS and email marketing out to their customers.
All right, thank you, David. I think we're just about out of time. So I just want to say to everyone who's still on the call that you should check out the listing for Salon HQ on Flippa Invest and connect with David to ask additional questions. So thank you everyone for joining. We'll be sharing the recording of this event after the webinar ends. So you should have a look out for your inbox to see the recording. Thank you everyone, especially to all the presenters today, all the founders currently raising rounds on Flippa Invest. Please go and sign NDAs to get admitted to their deal rooms, to ask more questions and review the specific pitch decks in more detail, as well as the term sheets of each round. So thank you everyone for joining, and stay tuned for the next pitch event. Thank you guys.